Most people think success in business comes down to luck or timing, but today, Beau's going to break down a proven formula that turns employees into business owners into wealth builders. Hey, Beau, how's it going?
Excellent, Bill.
All right, let's get right into it. How does someone figure out what type of business or franchise is actually the right fit for them?
I'd say go through our process and let us help you start with a business assessment and intake and a clarity call. Start there and let us open your eyes to what's out there. I think that's the best way to start.
You talk a lot about validation. What should people look for when they're validating a franchise or resale opportunity?
Well, if you're specifically to franchising, validation is extremely important. So you could have 50 other franchise owners throughout the nation, hundreds, 200s, 500 sometimes. Sometimes only 5 or 10, sometimes one or two if it's a new emerging franchise. The validation and process is extremely important because you're going to talk to owners and you get the real deal about the franchise. You're going to look at the FDD, the franchise disclosure document, but you want to know the good, the bad, the ugly. And you're going to do that by talking to other owners and talking to all of them that you can. And most importantly, finding people that have similar backgrounds to you. Those are going to be really important people to validate with, in my opinion. If you come from the tech world and you're a software engineer, it'd be great. Hey, do you have anybody in tech or in software that's a franchise owner? Yeah, great. You might have more in common with them. So get different perspectives and really, find out the real formula. Like how fast did you start cash flowing? What are the pain points? How's the marketing been from corporate? What are the problems that you've encountered? If you were starting over again, what would you tell yourself that you know now after running this business for 3 years that you didn't know in the beginning? All these questions. We actually have a checklist and a worksheet we give you. And we also encourage you to brainstorm a lot of questions before you get on these validation calls. And a lot of times you build rapport with these other owners and you can go back and talk to them a couple times during your due diligence process.
Next, we're going to shift gears and move into financing your business. A lot of people think that SBA loans are hard to get. What's the real story behind qualifying and getting approved?
On a franchise startup, really, first thing is what's the franchise, and each bank is a very established franchise that's got a good score and it's got good longevity. Those are the easiest to finance versus an emerging franchise that has 3 locations. So understanding the strength of the franchise is a big factor because a lot of banks want to do franchise systems that have more than 10 locations open. Sometimes people want to do more than that. Some banks only want to do brick and mortar type franchises. We work with a lot of non-brick and mortar. So what we do is we help navigate and figure out based on the franchise and based on you. And when we talk about you, what's most important for you? Good credit, low credit card utilization. We use an SBSS credit scoring system. It's 0 to 300. We want you to score 180 or better now, typically. And we want you to have your down payment, which could be 10 to 20% plus 10% post-close liquidity. That can vary. And we've gotten people in that, they put their last dollar pretty much into the down payment, but we're still able to get them approved. But those are the rules of thumbs we really want to see. We want to see that your current income can cash flow you on all your outside expenses. That's really it. It's pretty simple.
So you've helped clients buy multi-million-dollar businesses with less than 6 figures down. Can you walk us through one of those deals?
Yeah. So, generally on a franchise startup, most of the brands, unless you're doing restaurants and build outs and large gyms and things, most of the franchises that we're working with are sub 500 loan amounts. Now on resales, those could be in several $1,000,000, right? But on the startup, unless you're doing bigger types of businesses like trampoline businesses, indoor amusement parks, those are several million. But generally, the majority of people are investing in franchises that are a couple $100,000, and we're financing them. On multi-million-dollar deals, the majority of those that I see are non-franchise mostly. I think a lot of the businesses that trade that are multi-million-dollar franchises, those are usually food service, and occasionally you'll see home service, but those are typically listed with business brokers. So on deals that on multi-million-dollar deals, it all comes back to the structuring. We can finance 90% with SBA financing. On a resale franchise, We're not looking at the projections like we do on our franchise startup. We're looking at the tax returns from the seller and their profit and loss and balance sheet. So an actual deal we brought up in another segment we closed was a $10 million acquisition with SBA 7A financing, seller carryback, and a conventional piece. So those are the deals. On the franchise startup space, we're about to close one next week. No, actually tomorrow, which is Friday. $180,000 loan amount, and they're financing 80% of the total startup costs. We're working with a bank on that for an EnviroMaster franchise. So that's a startup. And then we're closing on a couple others. So they vary across the board, all different, right? But franchise startups, 80 to 90% of the total project cost is doable for an established franchise. And a business acquisition with strong cash flow, 90% financing is doable.
Okay, let's shift gears again into the scale it part. How do you build that wealth machine? So once someone owns a business, oftentimes for a little while, they're an operator. But how do they go to become a true owner where the business runs without them?
Come from corporate, get into entrepreneurship. A lot of us would go the franchise route because we have systems, blueprints, and coaching and support. And we're going to do something. Let's just call it an HVAC franchise. Our total startup cost for $250,000. We grow that. Now we have 5 trucks on the road. We have several technicians. We're scaling that business. You can buy more territories, right? And after you have a business up and running for 2 years and you have good tax returns for that business, you can get 100% financing on expansion. But we like to get people into real estate because you can use SBA financing for owner-occupied real estate. So you buy yourself the warehouse for your HVAC business. A couple of years down the road, you buy your competitor who's retiring, and then you get their $5 million a year business under your portfolio. A lot of private equity firms do that. They call it roll-ups. They just, expand by buying.
Yeah. So you also talk about the triangle method. Can you explain how that ties into scaling and long-term wealth?
Yeah, so I think the triangle method was just the realization that I had because I did things all the wrong way where, hey, I'm going to buy these rental properties. But then you have CapEx, you have all these improvements that you need to constantly do, all the maintenance things. And at the end of the year, you don't really get cash flow, or every month you don't really get cash flow. You might get a little bit, not what you expect, especially on single family and small multifamily. Then you realize that's when I had the realization that the triangle method is tax strategy, operating business, and with the excess cash flow you make in your operating business, you buy real estate for long-term wealth and tax purposes. But owning an operating business, I believe, in the beginning is the best vehicle for cash flow and the best vehicle for overall tax benefits and all the other fringe benefits like self-directed 401ks you can set up and all the things you can do.
So let's bring this one home. For listeners ready to make 2026 the year they go from a W-2 employee to a CEO, what's the first step you suggest that they should take right now?
I would say set up a free clarity call with us at bookwithbeau.com. Nothing to lose, everything to gain. I'm pretty confident in myself and the team I've built that we can help you if you're willing to be helped and if you want to be helped. Meaning, and I'm sure you might be in a great financial position and might not need help. But if you want to change your career, or if you're frustrated because you're making decent money but you're not able to save because you're W-2'd and there's nothing left, we work with tons and tons of people and have these conversations every single day.
All right. Thanks, Beau. Again, go to bookwithbeau.com, book that clarity call, and he'll take care of you.
Thank you.
If you're a solopreneur or small business owner, listen closely. Business growth isn't about working harder. It's about building smarter systems. It's about automation. And that's exactly what GoHighLevel helps you do. Build your funnel, automate your follow-up, manage your team, all in one place. Click the link below, activate your trial, and see how much more efficient, automated, and profitable your business can be in just 30 days.
playbook.com. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.